is Makena Simani, a Fund Investors member. It's so awesome to see you guys back with us. Hope you enjoyed this session.
Hi guys, welcome back to Fund Investors. I'm Dixon Mogambi. We are glad to have you back and hope you're going to enjoy this session with us and yeah, continue with us in this journey.
Hi guys, my name is Brenda. Welcome back to our channel. It's been a while, but we are back and we hope you're going to enjoy this session with us today. Karibuni.
Hi guys, my name is Gladys Jehu. Welcome back to Fund Investors. Let's keep learning from each other, onwards and upwards.
Wonderful, and my name is Esther, and I'm really excited to have all of us here in today's conversation. So today we're going to be having a talk with Felix of the Trading Room. So I'll request Felix to introduce himself to us and also introduce what the Trading Room is all about. So Felix, karibu.
Hi, hello everyone. My name is Felix Ocheng. I am a co-founder for the Trading Room and also an investment banker. I'm happy to join you guys today and take you guys through today's session. I hope that you'll be able to learn and please feel free to interact.
Thanks. Thank you, Felix. And so for those of us who are joining in this conversation, today we're going to be having a discussion about personal finance. A few questions have already come in, and so those are the questions we're going to be asking. But if you have any other questions, feel free to write them in the chat box below, and we will be sure to respond to them in the comments as well. So let's begin the questions. Bree, you have a few to take us through?
Yeah.
Sure.
Okay. Felix, the first question. What do you understand by personal finance, or what can you tell us from your point of view on personal finance, and should we be intentional about personal finance? Just take us through that for like a few minutes. Yeah.
All right. Okay. So now personal finance is basically us managing our own finances. The moment that you get some money, you get 100 shillings, you get 1,000, you get 1,000,000 shillings. What do you do with this money? Do you budget for it, and what are your priorities? That is all round an all-round introduction about personal finance. As an individual, I believe it's very important for you to understand personal finance. Personal finance starts from you as an individual. The challenge that most of us are facing in our country is that very few of us got to learn about personal finance during our young age. We've always been used to a point where money comes and money goes out. We are not really thinking about what would come in over the next 1 year, what would happen over the next 10 years. Very few people are always conscious about personal finance. So I think it's very important that all of us take this into consideration.
Yeah. So a few other questions. Oh, yes. Yes, Brenda?
Yeah, so what Felix is saying is that when it comes to personal finance, you're basically looking at your money, how you're utilizing your money, and are you thinking about the future? Because it seems like in the past, most people never used to think about the future, and they didn't really bother how to use their personal money. But I'm sure when it comes to personal finance, the way Felix has put it, you have to look at your money now, how you're investing it now, how you're using it now, and you also project it to the future. So yeah. Over to you, Esther.
Yeah, thank you. Thank you, Brenda, for just helping us to put that into perspective. So let's hear a few other questions. Makena, I think you received a question as well.
Yes, someone asked, what are the top 3 tips of saving and budgeting that Felix can advise us on? Because most people have this thing where when they save and when they budget, they usually do this like maybe for short term. So is there like a difference? Like, should I save for that trip in December, or should I save, until I'm 65 and never touch my money? Like, what are your top 3 tips, Felix?
Okay, now for any point, when you're trying to budget, when you're trying to save, the major thing is you need to know your priorities. Do you have long-term priorities? Do you have short-term priorities? And then do you have other priorities that are used for leisure. These are priorities that you can forego. So at any point when you're budgeting and when you're saving, you need to have three major accounts. By having three major accounts, necessarily, you don't have to open three bank accounts. All you need to do is ensure that you have, even if you're using one account, but you personally segmented it so that you know that at every point you have your personal books, which you keep. You know that at every point you have certain X amount of from your savings going into building, either if it's an emergency fund, which is a short-term fund, supposed to cover you for a brief period of time, if in case you have certain emergencies that you need to. If it's that trip that you're saving for, you need to have it outside another probably another account as well, or another allocation as well, coming in very handy. If it's long term, the challenge is it's very good that McKenna has mentioned long term, because very few of us always think long term when it comes to savings. Do you want to save so that when you get to 55 you retire, or you're waiting to 65 for you to retire when everybody else is retiring? When you retire, what do you want? What kind of life do you want to probably get into, live after the retirement thing, after the retirement period? Would you want, as an individual, to probably start a business? Do you want to go for vacation after retirement? So these are things that you need to have. So probably I would always advise, when you're saving, please look on the three major things. Is it short term? Is it emergency? Is it leisure? Or is it probably for your retirement, just as McKenna mentioned? Thank you.
Felix, just a question. You'd mentioned that we don't need to really have three bank accounts. So for those of us who maybe, or those who are not the best when it comes to putting their eggs in one basket, let's say money market or a bank account, how do you still separate that? Like, how do you know, okay, I'm going to put 50K every month, but in 6 months, I need to go travel or something, but I also still need an emergency fund. But you see, you're saying everything in one pot. So I know you mentioned something about separating it, like writing it down, but maybe do you mind breaking down clearly for some of us? Like, do I open the same bank account, but is there like a bank that has split, avenues on how to do it? Or is there like a way that I open money market and I have 3 accounts for money market? You mind just breaking it down a bit easier for us?
Okay. Now, I think, first of all, we have various banks that give you an opportunity for you to segment your account. Let me start by the basic thing which most of us know, the basic savings in our country, that is M-Shwari, the mobile-based savings. You can personally lock a certain amount of savings in your M-Shwari account. One of the good things about having an M-Shwari lock savings account, at times this can come in handy for long-term savings, because for you to withdraw money from M-Shwari lock savings account will take at least 3 days. I think that brings in the sense, if it's not important, if it's not urgent, you don't have to use it. If you have to go for a trip in 3 months' time and you needed money today, and M-Shwari is telling you to wait 3 days, probably by the end of those 3 days, you shall have managed to get over what you wanted the spending for. Also, another thing, there are certain banks, like I know Standard Chartered and also NCBA. If you have the NCBA app, you're in a position to set on your goals. Personally, I use the Loop app by NCBA, and you can be able to set up your goals, set up your Loop log savings account as well. So I think you don't necessarily have to have a lot of bank accounts. At times they become tedious, but also if you can manage, why not? You can be able to open. I know most individuals, mostly the salaried people, they're always willing to open one account purely for income, then the other account maybe for long-term savings, and also another account maybe for ordinary spending. So I think that is something that is workable.
Awesome, Felix. Thanks.
Okay.
Yeah, thanks. Thank you, Felix. And, just talk about holiday planning, talk about long-term planning. You can also have a vision board, as you can see behind me, something that will help you to really visualize what is it that you're saving for? Why do I need to save? So this, just having a visual representation sometimes helps. So Gladys, I know you also have a question for Felix. So why don't you go ahead and raise it? Thanks.
Sure. My question goes like this. It's basically related to what you've just answered. Maybe you can share with us some of the applications or apps on our mobile phones that we can use to help us manage our money. As much as we have bank accounts in different banks or probably in one bank, how can you use these apps out there to help us manage our money better?
All right. Okay, so now just as we've started, we know there are already two that we mentioned. If you want an account that comes in handy as well with an app for you to manage your finances, you can try the NCBA Loop app. Also, you can try and open an account with Standard Chartered. If you're having a bank, I know there are a lot of banks out here that have various money managing tools. Equity Bank the other day launched a way that you can be able to manage your investments within the app. I know there are a lot of other banks, but those are the two that I have an experience with. When it comes to managing your money through apps, there are certain apps like Money Manager app. You can try the Budget app. You can try My Money Excel. These are apps that come in handy, mostly when you, for those of us who have a day-to-day spending, and for those of us who need to be a little bit strict on our budgeting. There's a way that you can be able to input and say, set certain limits for these apps. If your spending is capped at maybe 1,000 shillings a day, then these apps will always remind you to key in your daily spending. They will remind you to key in your monthly budgeting, your weekly budgeting. I think this come in very handy for you as an investor and also as a saver. I believe at the end of usually when you get into Play Store, when you get into App Store and you look on budgeting tools and budgeting apps, there are a lot of them. It's finally, and also in the long run, it's just up to you as an investor to come up with, as a saver, sorry, to get up with one app that you feel is very compatible to you and easier to use, that you can be able to modify. I think you can try any app. If you have an idea, you can probably share it also again with Esther on the comment section, and then we can also be able to try and do a review. Thank you.
That is well answered. Thank you, Felix.
Yeah, actually, I think we had a discussion at some point with you, Felix, and I started using the Money Manager app. And it's really nice because you can sync it with your Gmail address, or you can sync it with any of your email addresses. So no matter what device you're on, you can easily just get your information in real time. So thanks for that tip. I see we have one more question here that Mugambi can help us to ask. So Mugambi, karibu.
Thank you, Esther. And basically, the question that I'm going to ask Felix is that how can someone proactively secure their personal finance goals and get out of debt? Remember, majority of us could find ourselves in huge debts and we do not know how to get out of it. How can we be able to break that cycle of being in debt every other time by managing our finances?
Okay, that's a very good question, Mugambi. So now, one of the things that we need to understand when we're managing debt is that we have good debt and we have bad debt. Whenever you're accruing good debt, then good debt is anything that is supposed to give you revenue, and in the final edge, good debt is supposed to repay itself. Most often, we fall into bad debt, and bad debt are those debts that we borrow them for short term, hoping to be able to clear them, while in the long run, they give us a lot of burden. So one of the things that I would encourage you, first of all, when you set up goals, at times you might find that you're so strict to your goals that you have to borrow for you to be able to sustain yourselves. Remember, most goals that you're supposed to set, you're supposed to have a long-term vision. Now, when you're having your long-term vision in goals and then you have debts on the other hand, you have to ensure that the same way you mentioned priorities when speaking about personal finance, you have to ensure that that is pulling you down is always let off first. What you can do for long term is you can reduce a little bit on your long term goals, on your savings, and then you increase on your debt outflow. The major reason is because you see debt actually accrues interest. So that means you're paying a little extra for that debt. The longer you have it, the longer the interest that is earned on that debt. So the first time, the sooner you clear that debt, the easier. And I believe once you clear that debt, it will finally give you an opportunity for you to increase or even double into your savings. One of the things that as an individual you're supposed to do is always ensure that when you're servicing debt, then you don't have a lot of targets in terms of savings. An example is you can be able to forego your trip to Diani this year, but you clear the debts that you have. You can be able to reduce on certain leisure activities. Maybe if you go to eat out, maybe you're going for for takeaway food once a week or maybe once every month, you can probably cut down on those so that you can be able to clear off your debt. Because in the long run, there's just one principal thing when it gets to debt. The higher the debt and the longer the period, the more it will derail you also in terms of your long-term financial goals. Thank you.
Felix, that sounds really awesome, but I'm just curious here. Seeing as we are normal humans and we have needs and desires, your way sounds very strict. So for those who still want to have a good life, still want to, you know, buy that nice car and stuff like that, what would you advise them to do? Because yes, we need to be paying our debts and save less and spend less, but I want to enjoy life. So what's the best way to go about that whole paying your debts, but also enjoying, having the balance, the so-called perfect balance?
All right. So I think one of the challenges, and yes, I agree, we're human by nature. If you're used to maybe going for trips every year and then 1 year you want to cut that off, it becomes a little bit of a challenge. But one of the things that we have to understand is that budgeting seems at times when we want to budget, getting allocations is what is always a little bit tricky for most of us. You find that we have the mental budgeting where we believe that at the end of every month, the rent is going to go for maybe 30,000. And then I know food is going for 5,000, but you've not strategically allocated this. One of the other things that you can do is to just look on your normal budget. If you have to be strict with your savings, then you have to look on your normal budget so that you can be able to reduce a little bit on your personal spending. And then the second thing is you can increase on you can have a little bit of an increase on your revenues. You can probably develop a side hustle, something that can give you a little bit of more income generation, so that any income that gets off, and this comes in very handy for those of us who are doing other businesses, those of you who are not fully employed. One of the things that you can always do is you can ensure that if you have a side hustle, that side hustle sets off the debt. So anything that gets off the side hustle will always be coming in to pay the bad debt, and then your normal budget is not affected. So these are things that we can always get to look at. Thank you.
Yeah, thank you. Thank you so much, Felix, for that. And, just to help us to put a summary into this conversation, I hear that we need to have plans and have goals, even have a vision board, and make the most out of the instruments that are available for us. So instead of winging it, we can actually look for opportunities to use applications. I think you mentioned quite a number of apps, Money Manager, you talked about NCBA apps, some of the banking apps, so we can actually make the most out of those. Prioritizing our goals, also clearing our debts so that we have less obligations on the funds that are coming in. And definitely, I think when you just mentioned about increasing revenue streams. So for the rest of the Fund Investors family, just to let you know, we'll be having a part 2 of this conversation where we'll now narrow down into one of the instruments that you can use to be able to increase your revenue. And so we'll be talking about stocks in our next segment. And also just to let you know, we're in a partnership with the Trading Room through Felix. And if you're interested in learning more about personal finance, we'll be having some of those links in the description box below. And so that's it for us from now. And looking forward to our next conversation. Bye for now. For now.